Hello again. Right, part 2 of Back to Basics. Now I think at this point you understand, or hopefully you understand, how I draw my descending, ascending trend lines, and then traditional patterns like this particular wedge here. Okay, so I think at this point it's important to show you how I view trends and the difference between a swing trend and a candlestick trend. So in order to do this, I need to go down on a lower time frame. We'll go down on the daily actually. We'll have a look at this area here and see whether we can find anything interesting. The reason I picked that area is because it's an obvious reversal level. This indicator here is just telling you when the price crosses over, i.e. 1 MA crosses over the 3 MA, which is the nearest I could get to a sort of arbitrary indicator, very rough indicator of a crossover of support and resistance. I'll delete that now because it's not necessary, and I'll talk about that in a later video. Right, let's scroll over to that vertical line I drew on there. Wherever it is. You can tell I haven't done this and analysed this particular pattern before. Let's go. There it is there. I'll highlight it in case it's hidden behind one of those daily breaker marks. We can get rid of them as well actually. Control and Y. That's it. Daily chart again. I should have checked the actual date. 2015. Let's go down to the weekly first. There it is. And the daily. There it is there. Now we can tighten that trend line up to that level there, which tidies that up a bit. We can tighten that one up to there. Not that it matters to this video I'm making now, but it will just, I like things to be nice and tidy. Precision trading is what we're doing here, guys. So I can zoom in now, and we have a trend reversal going on. In fact, I can go up higher here and we'll do this trend here. If you look on the line chart, you can see the trend I'm talking about. High, low. We'll just treat that as one swing. High, low. Sorry, high, low, lower high, lower low. Pull back, continuation. It's a little bit messy, but as I said before, I am not cherry picking these charts. I will just interpret them as I always do, and try and explain what I'm talking about. So high, low, lower high, lower low, lower high, lower low, and you keep singing the song until you break a significant level of support on the left hand side, and you can clearly see that's been used as support because it's forced the price up. And you can keep singing the song from this side, although this isn't relevant to what I'm talking about now. Low, high, high, low, high. It hadn't broken any resistance on the left hand side. Higher, low, higher, high. Pull back. Now we can clearly see it's broken some resistance. So that's a valid level of resistance used as support this side. You can expect this to continue up. And we've sung the trend song as well. So there's no support broken here until this point here. So just keep singing the song until you get past that point there. It will become clearer when I do the candlestick analysis. So there's your swings. How can we make this more precise? Well, the way my method evolved was because I had to ask myself that question. How do I know categorically whether old support has been used as new resistance, so I can continue down. Well, that's where the candlestick analysis came in. And if this one doesn't work properly for the purpose of this video, then I will find another one, or we may be able to use this one. I don't know. Sounds vague, but it will become clear when I show you the next time frame up. So we'll go to the weekly, and this should then give us our candlestick analysis. By the way, this is early in the morning. It's 5:54 in the morning. I'm not bothered about missing any trades, because there's millions of trades a day available. The method works any time of day, although it's always best to pick the most volatile points in the day, like the Frankfurt or London Open. I don't trade the American Open. I quite like trading the end of the day with this method, because it's so powerful. So the candlestick trend now is singing the same song, but using the highs and lows of the candles. So we're looking for our highest high here, and this is precise, 195.823. High of that candle is 195.870. So that's the highest high. So now we can sing the song on the candles. Low, high, higher, low, higher, high. We keep singing the song until the low of the original candle, the last candle in the uptrend before the highest high, is broken. And we use the high to start the song. High, low, lower high, or the highest high should I say. High, low, higher high, higher low. Low, high, low, lower high, lower low. I told you it was early, didn't I? And then we're looking for a break of the low of the penultimate candle. We can draw the low on there, and this is what I mean about precision. Double check that. Yeah. So we've got the low, the high, the higher low, the higher high, and then we start with the highest high and sing the song the opposite way. The high, the low, the lower high, the lower low. You remember I sung that song on the daily chart as well. And critically, if that low has been broken and closed below, then I'm all over this for the shorts like a rash on a baby's bottom. And that's it. There's your trend break, there's your continuation. That's how to make a mess on a swing trend on the daily chart look tidier and tradable. So we go back to the daily and look at that again, and move that to the high because that's where that highest high was. And now we can move it to the line chart, and we can see what we were looking at before. Remember the song, high, low, lower high, lower low, lower high, lower low, and break. We've got to break an old support level. Low, high, higher low, higher high. That's a support level. So that's where my precise method is better than an imprecise method, because the candlestick trend is the difference between, oh, has this been broken, has it not been broken? You can then wait for this low to be broken and this low to be broken. No, we have got precise levels to trade from because of the candles. Low, high, higher low, higher high. Reverse the opposite direction from the highest high, which we looked at using the visual, this thing here I'm talking about. High, low, lower, high, lower, low, and break and close, and then continuation. And I'll do it in this opposite direction with this one as well, because it is random. sorry, not random, I've chosen this chart at random, and we'll see whether we can get the same result. Right, high, low, lower high, lower low. Notice at no point over here did we break, because obviously these candles are forming as you're watching them. So high, low, lower high, lower low, and all you're waiting for, if this is going to reverse, is a low, high, higher, low, higher, high. The minute that low is broken, then that was your penultimate candle before this one formed. This then becomes your penultimate candle, and you sing the song again. High, low, lower high, lower low. It is just a bit lower, I can see that. Low 46.1, low, oh, I do apologise, low 176461, low 17666. So that actually presents a useful point there. That is an inside bar. So you just continue singing the song until this reverses to the upside. High, low, inside bar, forget about it. Lower high, lower low. This is the downtrend, the two red candles. That has no relevance on the song to the upside. And then we've failed to break the high of that candle with this candle here. There is no reversal on. So we sing the song on the next candle. High, low, lower high, lower low. That's the candlestick trend to the downside. If we break that trend to the upside with the new song, low, high, higher, low, higher, high, and close, we are in a valid reversal. Try it yourself, guys. You will see when it works and when it doesn't work. You will work out it is quite high probability, and then to find our targets and our stop losses is very easy, but I'll explain that in another video in the future. But we can just draw the levels on this chart now to show you, and drop down the time frame and show you how it looks on the daily. It's all about fractals, guys. It's all about, you know, the internal. When we drop to the daily, we're looking at the internal workings of the weekly reversal, candlestick reversal. So we draw a high on that one, and what you'd be doing, I'll just show you quickly. As the price is dropping, you draw a high on that, you wait for the low of that candle to break, and then you wait for the high of that candle to break, and it's your reversal. If it doesn't happen, you do it on the next level, and you wait for that to the low to break, and then the reversal, and you can sing the song, and you carry on until it reverses. And it's always the last two candles. Why? Because that is the reversal. That's where it's exhausted to the downside and the trend reverses. And this instance, I'll get rid of that because it's not the right script on the side there. I wrote a script to snap to the levels of the candles and give you the price and so on and so forth. So let's delete that one because it's not relevant to our current candle. Here we go. So this, we've drawn this on without knowing what's going on here. Then it breaks the low, and then it fails to go any lower, and then it starts to trend upwards. Low, high, higher low, higher high. Break and close, we are now in an uptrend. That is a candlestick reversal. Now we want to see the internal workings of that. This is the daily chart now, and we can clearly see we've got a low, a high, a higher low, a higher high. We've broken old resistance, and remember my description of true resistance is when a low is broken by the price. So we can draw our true, according to my rules, descending trend line, and as you can see, that's a no-brainer as well. So this is the uptrend. And one of the other rules I have, and this is important, is when resistance is broken, price will always come back to test it. So you don't enter on the close and break and close, you wait for the pullback and you do the same song again. I'm not going to explain it on here because it doesn't actually happen, but we don't just go one time frame down. We can enter this trade on the daily chart, this weekly reversal rather. We can enter the trade using the M1 chart, and when we enter on the M1 we have our stop related to the M1 chart, because all the other time frames have done their stuff. They've trended down, they've reversed, they've trended down, they've tried to break, they've failed. We do this song again on the H4 on the candlestick, we do it on the H1 on the candlestick, we do it on the M30 on the candlestick, reversals, until price is exhausted to the reversal side. And the only way, after the direction of a W weekly reversal, the only way it can go is up. That is my unique view of candlestick trends and swing trends and validations of the candlestick trends, and using the lower time frames to enter with minimal risk on a higher time frame reverse, on a higher time frame alert, if you like. And what's so good about this is you can take the targets not from the 1 minute, but you can derive your targets from the weekly. As such, you can then use this method, the 3 candlestick reversal method I talk about, to enter the pullbacks. Just quickly, here's one here, low, high, inside bar again by the looks of it, or lower high, lower low. Keep singing the song until you can't sing it anymore, and then when it gets low and doesn't go any lower, you can sing the song low, high, higher low, higher high. Obvious break. What does price do? Absolutely rocket. Okay, that's enough for part 2. So I've shown you a reversal to the short side, a break through support with this close here. It's come back with that red candle and tested that support at some point, or we could say this is the break and it's tested support with that one and then it's collapsed. And I've shown you the opposite direction in 2 consecutive moves. So I could have traded long here, valid, and I could have traded short here with an absolute valid trade. Do the homework yourselves on these reversals, guys. I promise you'll love it. And then you add the indicator, this fantastic free indicator, to the mix, and it's just belt and braces. I can't take this off because I've had it on my charts for 15 years. It's proprietary, so I can't share it, but this knocks the pants off this. But occasionally this one gets me a little scalp that is not in my method here, so I wouldn't even start to teach it. So there you go, guys. The difference between swing trends and candlestick trends. There is no difference, they're the same thing, but by the magic of fractals, fractal analysis, they one explains the other. Thanks for watching. That's part 2.